What's up, everybody? Chris over here, founder of Pollinate Trading. And well, it's been a minute. So, hi. We've been trading along quite well in the trading lab at Pollinate. Can't remember the last time I did a video, but we're getting on. It's crypto season, man. Crypto is going. And at the moment, we are right at the 2023 highs. So I wanted to see, we may or may not have broken them by now. We might be pulling back, who knows. It was happening right as I was getting going here. So I want to go over the systems I'm using to trade. For those of you that have this Swing B system, that's the system. We'll talk a bit about it if you don't have it. And take a look at a couple of trades that I got into this past week. And then we're going to talk a little bit about what we got happening right now. Okay, so let me share my screen. And I've got two freaking rippers going on over here. We've got Bitcoin, which the high, according to Bitstamp, was 31,818. We just got to 31,823. So a new high of 2023, brand new highs. So we'll just get into the ideas of that sort of stuff real quick. When one thing you have is, since this was the high, and in fact, let me just go to coin. Let's go to BTC on Binance, because I think that's the most active. Okay, the high on Binance 31,850 and 31,830. So it hasn't done it on Binance. It did on Bitstamp. I don't know, whatever. But what we want to look at here is, before we get into the systematic, I'm going to do a little bit more tactical look at things. And I'm going to talk about price action and the way traders use price action and mentality. So this swing high from July of 2023. It was the third higher high going into it. Again, we're looking at Binance perps here. We're not, it could be different on Coinbase, could be different on each individual exchange, but that's what it looks like here. And this is a 12-hour chart. So we could, go to like a daily chart, and you can see how things work. Now, the thing about this is really good price action. It sucks. And Bitcoin is one of the most traded assets in the crypto space, of course. Like, it's the biggest and it's been around the longest. Most people use it, of course. So there are some games that get played with it, but they don't play the games with this as much as you can on much smaller market cap and volume systems. So typically you're getting when you're getting something like that, this is a liquidity run. And then they're looking for another liquidity run. The thing about markets is, until they're thoroughly in their bull directional market or bear directional market, as opposed to a sideways market, until they're thoroughly into those markets, they rock you in and out. They pull you in and out of trades over and over, and you will be convinced every single time that this time is the breakout. Look at that. We went from 24,755 to 31,800, right? So 24, so $7,000 in a week or two. Like, if that didn't convince you that we were in a new bull market, it's hard to wonder what could convince you, except this would convince you that you were not. It gave it all back, and then it went ahead and it ran new lows. Okay. The thing about, let's use the term bull market here. The thing about a bull market is it doesn't leave the train station with everybody on the train. So if everybody owns Bitcoin right now, then it can't go anywhere because there's nobody else left to buy. And if people are convinced that we're going to do this again, which they should be, because it has only proven to us that that's what it's going to do over the last number of months. right? Back to April, from April to October right now. We're in October. It has done that over and over and over. And it's a nice sideways range. So where would you be selling if you were looking at this? How would you be trading it? You would be buying down in here and looking to sell up in here. You'd be shorting up in here, looking to buy down at the 25 range. So 31, 32, exit and initiate shorts, 25, 26, exit the shorts, initiate longs. That's pretty much what you would do. But what I'm going to do is I'm going to go and take a look at the structure of this. We're going to use some price action tools, and we're going to use just some advantages we have to take a look at it. And then I'll show you how I trade it with the right system. So we have to identify where we're at and identify how to use things. So first thing, let's take a look at the monthly on this. And unfortunately, Binance perps only go back to 2020. So let's BTC USD. Let's go back to Bitstamp, and Bitstamps go back all the way to 2011. So what you get is a better understanding of, I mean, you can see all the volume. This is a volume. All the volume happened from 0 to 12,000, but the biggest price moves happened from 12,000 to 69,000 using that. So we're going to go ahead and add, I don't think that's going to be able to do that. 12 months of 1 year. A little big. And let's turn labels, values. Let's turn values off. Okay. So what I have on this is I have the, I have this, see if I can find where to put it. Let's do here, the breakout in 2020. So I'm going to create a volume profile of all the volume from 2020 on. And you can see where we are in relationship to the prices. We are using volume profile. This is measured from November of 2020. That's when the breakout really happened, right? So I'm going to use that right there. I would say 2020 on was a completely new era for Bitcoin. And we could get into the bonds, we could get into interest rates and things like that to show how I mean that. And we'll do that here in a few minutes. But what I'm looking at right now is I want to say, okay, we've got from our previous level, that's where we're at. Now, if I was going to analyze this level, I would also do a similar sort of range, right? From this one to this one, so that I could have like organized ranges. But that shows me we have this low volume node. And what happened was this back in March of 2023, this price just went from 23 to about 30 really quickly. And it just left a lot of people you can look at the size of the volume here. This represents volume traded at a level. Okay. So from 25.6 down to like 23.9, 24,000. There is people just didn't get it, and it took off. And that leaves, this is how gaps are formed. A lot of people look at gaps differently, price gaps over all along where they open and close. But where volume is missed, that means there's orders that were just jumped over. And when orders were jumped over, then there's two things you could really do. That's a send it mode. That could honestly just send it off to a new place. And sometimes it does. So sometimes you leave these gaps in there, and notice there were orders that went through now. So if we were to go back and look, this one, there probably was a bunch of trades that never went through, but over the course of April, May, June, July. So any of these, like May, June, August, and September, trades happened at the gap. This area down here, 23,218, you would look at something as a test, but because this area in here has been filled up, that filled the gap. Enough people, enough time was there. That's at least 4 instances of price moving down into that area. So anybody who wanted it, these are monthly candles, by the way. So, it could have been a minute that it was in there. It could have been a week that it was in there. But the point is there were enough instances that price level was visited that enough people were willing to buy from there or sell. So that gives us some structure. And if that holds now, if we can continue to hold that range, then that says, okay, we're good. That also says anybody who was still waiting to buy back down in here, they're going to miss the boat. They're not on the train. Back to the analogy of being on the train, being off the train. They are no longer on the train. If we leave from here and people are hoping for it, remember, if we go back to the daily chart where we were looking at it, that's this area right in here. So you can see there was a lot of, this was the gap. This is where it just gapped and prices just took off. And you can see that we came back into that area and spent some time there. It's not fully cleaned up yet. There is some of this over here still down to possibly 2093. I don't know if I got enough space on this to, yeah. Okay. There it is. So there is still some prices in there and in here down in the 20s. So if this fails and comes back in here, there's always the possibility that we could come back down into this area and clean that up. But there has been volume traded there. So enough people who wanted it were able to get it. I'm sorry, not here. They were not able to get it. Here, they were able to get it. Pulled back into that range. We spent 1, 2 days, 3, 4, 5, maybe 6, 7, 8, 9, 10, 11, 12, 13, 14. So whatever, we 10 to 15 days price traded, 10 or 15 opportunities that price traded in here. So we now have the opportunity for it to take off with that in mind. Okay. Now I'm going to turn this other one off and I'm going to get to more of the back to the, the 1 month areas, and we can see what we're up against. The value area high of 2022 is around 32.5, and that's where we die out. Also, this value area, that's where we die out. But if we look left and see 2020, back to looking at volume, very little volume traded in here. Very little volume traded in here. So what that means is there's no overlapping volume. There was anybody who wanted it in here had to chase it and probably got hurt. But now we have, you now have this, you see these void areas. We now start filling these void areas, and you can see this area right here, this void right here. You can see how thick this one is here. So it's filling in that area. These are all overlapping down here. So theoretically, that's good enough. If we want to come back down, we can come back down, no problem, and stay within that range. But just looking at it, it looks like everybody who wanted it had the opportunity. And now we can send this thing to chase mode, okay? If it decides to get going, the next level we're going to look at is going to be, we're going to start looking at previous levels of low volume or high volume, okay? So we're moving from areas of low volume, which was down in here. This area down in here had to become big volume, which it now has big volume. And then we start looking at where's low volume. Low volume is going to be in the 40 to 45 range or so. And again, in the 53 to 50 to 53 range, let's just call it, is where there's 2 more low volume areas that were left. And of course, there's no volume above it. So when you clear up a lot of these orders and get a lot of old business handled, you can see that, that you can start moving on. Now, I'm not calling for new highs or lows. I'm just looking at where we're at, okay, and developing a plan and understanding how to participate in here where you don't have all the information, because until it happens, you don't have the full picture. We have a really good idea at the moment, but We don't have the full picture. So we just want to like stack these edges on top of each other. Now you can look at things like Fibonacci, bring it up into 45. So now this low volume area gives a little bit more credence to that, maybe even up into here with basic technical analysis. Now, let me take 1 second to talk about why technical analysis is so good on crypto and a lot harder in traditional markets, because the participants in crypto are smaller time frame. They're like a $50 million trade on, let's say, like Link or something. Even Bitcoin, a $50 million block, that's noticeable. That's gonna move things. People are gonna be like, whoa, right? A $50 million block in the S&P 500, people are going to talk about it for 15 to 20 minutes, maybe, in the sense of icebergs or something, but they're not going to, the billions of dollars that it trades, per day, no big deal. We're talking big money institutions with huge amounts of infrastructure. But in crypto, you don't have that. So it's oftentimes it's just dudes, people, random mujeres y hombres, like just trading away, right? And so what do? They use technical analysis, and the technical analysis works really, really well. You have to understand that it's not 100% accurate. It's not meant to be. It's meant to kind of get you in there, get you to where you can have an understanding, and you can create criteria. If this happens, then that's telling me that this is playing out. If it doesn't happen, well, then something else is. Or if it does happen and then it reverses, okay, that's telling me something else. So let's go back to see what I mean on that here. When we're looking at these higher highs and higher lows, right? That is bullish price structure. So if you were looking at it, thinking to yourself, okay, this has to go because higher highs and higher lows, well, on the daily time frame, you might be right, but on the weekly, you might be wrong, and on the monthly, you're certainly wrong. But that doesn't mean it wasn't right at the time. So that gives you good risk reward, saying, okay, we're putting new highs on the year, we're dipping into previous year levels over here. Interesting stuff. Okay, we could very well be going. This was an incredibly powerful move too. So it wouldn't be wrong to think that was going to be the case. And then it just died. And everybody who was holding on to this just sold that. This was just giving it back. Okay. Another rip, more people. And so you have the hope of this rally happening because, it was incredibly strong. And then coming back, we know that there was the volume, there was gaps missed. We know that there were trades that were not taken. We know that there's a lot of orders there. And, it's going to seek out where the more buyers are going to be. If buyers are going to be above 32,000, it's going to go above 32,000. If there's a lack of buyers up here and nobody else is there to buy, price is going to stop going up like it's doing right now. And it's going to come back down and say, okay, where are people looking to buy? What you would be expecting to see, what would cause traders to want to buy? Well, higher highs and higher lows. Yep, got that. Cups and handles are things that traders look. I'm not saying to do these. I'm saying that these are things that are going to bring different cohorts of participants in the market onto the field. Okay, so you don't need to put all your, all your hope and beliefs into a certain style, cup and handle, head and shoulders, inverted head and shoulders. Peter Brandt said this, and like none of that is, you don't have to believe it as gospel. What you will do is look at it and say, okay, great. I can structure this. I can see where we're at. And I also have contingencies. So if I was to look at this on a contingency format, yeah, let's start this one up here. Okay, so looking at this, all of the volume is up here. all the volume is up in that top range. Let's see if it transfers over. It does. And let's move it to the right. Okay. So we are in the strongest area of turnover here. So the most amount of volume on the year has happened up here. This is called the point of control. 70% of the year's total volume has happened from 25,200 to 31,534. And the absolute largest amount of volume happened at 26,850. That's what the dotted, the yellow or green, whatever color that is, line represents the absolute most amount of volume. And this represents that. So what we have is a move below that area should be considered to be bought. Also, a move above it would be considered to sell. It's a mechanical trading style. Look above and go, look above and fail, look below and go, look below and fail. So it doesn't tell you what to do. There's two outcomes up here, right? Well, three really. Goes up and then takes off. Goes up and reverses or does something else sideways. And typically what you want to see is you want to see a breakout, a pullback into this area over here to find high volume support. Say all the volume that was over here that we saw, did that come back in? Yep, it's coming back in. Okay, that's going to give us a little bit better idea of higher prices. If it goes up here, puts in a new high, and then dips back in, and it just goes, and there's no buying pressure to it. Like this was buying pressure. There was a lot of pressure in here. It failed. So it doesn't mean that it's right all the time, but what it does is you can look at it and you say, okay, it breaks out, it comes back in, but look at all that. Everybody was buying, or maybe they were selling. And then it just, so it looks so strong. It did so well. There was so much positivity. The market, the equity markets were ripping. So risk market was, all risk. People were taking risk. And then it just all hope kind of died and it dropped back in. So let's look at where we are here in this head. Right now, we're up here, big spiky move. There's going to be volume gaps here, here, and here that may have to get filled. But if they don't get filled, well, that's we've already put in a lot of volume there, so that's fine. Then we start looking at the next higher levels, up 39 maybe, places over there. If it comes back in, and so what you would want to do is, instead of looking at a 12-month, change this to a 1 month. And so you can see how the volume, we should be able to see how the volume looks each month. Okay, so right now, in fact, let me just make sure that this is fun. Okay. Right now, big volume up here from previous months, but we want to see this histogram start to fill in. When we come back down, I want to see these getting bigger, because if they don't get bigger, that just means it's going to keep going down until they start getting bigger. It doesn't mean that it's not going to rally. It doesn't mean that we're not going to take off. It doesn't mean any of that. It's just, that's what I want to look for. Okay, now let's just look at some basic structure of this. We have higher highs and higher lows. Until the higher highs and higher low regime changes, we're still there. And even if it does change, even if we do start getting lower highs and lower lows, that's we're going to want to watch that volume, right? We're going to watch how the volume reacts in those price levels. Okay, so fairly simple to see. You can even look at it on a larger scale. This is all higher highs here, higher highs, higher highs. So in a bigger time frame, not the daily, but let's do a 2 week. Give us a good picture. On a 2 week, look how up that is. If we fail to put in a higher higher, then we got to watch and see if we do a lower low. if we put in a higher high, then even if we get a pullback, we want to look for a lower low for the structure to continue. If we don't put in a higher high, the thing is you're going to get, doesn't mean that this is the trade, but you're going to get people saying this stuff, head and shoulders, right? So one man's head and shoulders is a triple, three drive pattern, triple thrust, whatever, triple top breakout. Those are pretty common. Or the reaction is typically 3 attempts at something on a most powerful enough scale of volume, oftentimes go. So looking at Bitcoin, since it's been around in here, I guess March, April, May is when I started getting bullish on crypto again and started getting in. So what have I been doing is I trade my Swing Beast momentum system, and I do that on a 12-hour. So the Swing Beast momentum system, just have it here, basically looks to buy breakouts and sit in them for a long time, for a good amount of time. Because what you get, as you can see, here was the entry at 25 close, 518. So 25,519, it would have gotten in. And you can see 1, 2, 3, 4, 5, 6. So 3 days, that's a 12-hour. So 3 days of sitting there. Let's see if we can see anything with volume on that. Volume should look good right over here. It does. Really big volume. See how big the volume is? That's because it broke out and then buyers bought it. This is what those breakout pullbacks I want to see. This is the sort of price action I look for on a breakout. So if we see a similar sort of scenario as this up here, that could mean that we're going to see a continuation. So for my Swing Beast system, buys the breakout and then stays in it for a couple of weeks. This is on a 12-hour, has a 60% win rate, 2.4 profit factor. Let's do, so on the daily chart, 69% win rate. Nice. And a 5.5 profit factor with 6% drawdown. So this one's actually, not too long ago. So 29,900 was the 29,927. So 928 would have been the entry on this, and just getting going. The last time it was in that one would have been 26.5, and it got out at 27.6. So $1,000 move. Not bad. I like the 12-hour personally. And sometimes I'll just, when we're in a trend, I'll hand it over to that 24-hour chart. And then, you could do like 3 days, 1 week. It gets harder because now you're sitting through, weeks and weeks and weeks of a system or a product that doesn't, has gone through a lot of bear markets. So I like 128. I like the 12-hour to get me in, and the 20 or the 24-hour to sit on it. So that's the Swing Beast system. It's a momentum. The way we do it is we structure it with a market regime first. So it has to be in the ideal market conditions for a trend to start happening, which is the bull quiet and bull volatile market regime, which is a trending higher regime. As you can see, we got it. And then it just looks to buy breakouts as opposed to fading breakouts, like a mean reversion. So that's Swing Beast. And I'm going to show you on it on Link, because I got into Link on Friday. Same sort of thing. Breakout, get long at 806, currently at 10, got up to 11 something, currently at 1015. So, 30 something percent move. Similar sort of scenario. Let's see what the, it's a newer token or product, so it's not really that good as far as giving you good results. But what you wanted to be doing is what I do with this is I want to be rotating from Bitcoin into all the different crypto products that are going to be moving. Okay. So in an algorithmic format. So even though this is manually executed, it's a systematic format. It'll just find that I have a universe of my cryptos that are in the sweet spot, and then I just rotate through them. So Friday, Link came in. Let's take a look at Ethereum. Nothing on Ethereum. It's just getting going, but it's kind of been in a downward thing for that period of time. Let's take a look at like something like Doge. So Doge just had an entry today. Of course, everybody, when something like Link gets going and something like that happens, everybody's going to jump on a thing like these super cheap ones. And of course, when that happens, Bitcoin steals the show. So let's do like Shiba Inu. It works, but it's not that good. I don't like it on that, but things like that. LTC USD is going to be a really good one there. Guess not. All right. I thought that was going to be a lot higher. It might not be in the regime yet. Oh, it's not. It's out of the regime. So we can't. Yeah. So that's why it's not trading. Cool. So it wouldn't give you a trade. That's what it's meant to do, is not have you in any trades when it's not doing. So it should get going. I don't know when it's going to get going, but it should get going here. So that is is what I'm in right now. I'm in both Bitcoin and Link. I wanted to show this one. We're doing because it's the beginning of what I believe to be crypto bull market season. I wanted to offer out the system I use for my crypto swing trading. It's called the Swing Beast, and we're offering it for 50% at pollinatetrading.com/swing-beast, or just pollinatetrading.com, and you can find Swing Beast up there. There's a 50% discount code. Just use discount code crypto. If you don't, when you go to the checkout page, if it doesn't already apply the 50%, you can do that. So I'm going to look to why things might be interesting, and why. Remember, we talked about the idea that things changed in 2020. Remember when we did the that profile, and everything broke out in 2020, and it's not Link, right? It's a separate time period from, here we go. So in October of 2020, this is when everything took off, right? It went from like 12,000 to 69,000 ultimately, and is settled here at 31,000 right now. Why did it all happen in October? So that's 2020. So 6 months after COVID and all that stuff. Don't get me banned. When this is the bond, these are the US 30-year bonds. When did the bonds start going down? So here was COVID right over here, right? Here was the fun. And then this is when bonds just started to go down in price, but the yield, interest rates started to go higher. So we needed, higher inflation. And then that, instantly turned into everybody owns Bitcoin, and, it was wild. But what I'm looking at right now is the potential for a bond market to come back, and a lower interest rate environment to this time be more conducive to risk. Well, maybe not more conducive to risk, but better for Bitcoin. So in 2011, August 2011, Moody's, S&P, Fitch, two of the three uh, rating agencies downgraded the U.S. Treasury or U.S. debt. That happened August of 2011, caused the stock market to take a major shit. And bond prices gapped up. Let me show you. Remember, we like to look at where gaps are in volume, not just price, in volume, and we have it. And since 2011, so for 12 years, we had not seen this price. And ever since 2020, we've come down to this level. And today, we hit it. Bill Ackman came out today talking about he's getting whatever long bonds, I don't know, short bond, whatever, probably long. But that happened at the same spot. And it also happens to be a 50% level, the fib level, the 50% fib, if you believe 50% fib, half back, right there, right? So what does that mean? Interest rates are pretty high relative to what they have been. We've got war in 1.5, 2 spots around the world right now, maybe a third. We've got inflation. We've got political turmoil in the United States with the House currently not existing. Senate has taken over, and it's a volatile time in the market or in the world right now, and the Fed, or even the Treasury has the ability to. Back in 2020, we didn't really have the ability. The U.S. didn't have the ability to do much except print a bunch of money. Like we couldn't cut rates. There wasn't a lot of wiggle room. For the past 2 years, they've been getting to a point of wiggle room so that if something were to happen, we at least have some ammunition to do so. So if, let's say, a U.S. warship was attacked, let's say U.S. troops go in, let's say other attacks all around the world start to happen. Gold breaks 2000 again, or something happens. Somebody has a heart attack who's very high ranking. Stuff can happen and can cause chaos in the world really quickly. They have the ability to raise rates here. And it just so happens that they got to this price gap area where we want to test it out. So it's not going to, I doubt it's going to be something like today or tomorrow that happens. But in this area, when that's all done, that puts us in a place where the possibility of getting back into it, and we would look at the next levels, 147. So if we look back historically from 2000, 1999 or so, bonds had just gone straight up. We could do US 30-year government bond, TBAC. Yeah, that's the one. What? No, it's not. Is it? I thought TVC would be a US. There we go. So this goes back to 1988. So the yield of the 30-year bond went straight down all the way down to 1.17. It looks like 1.17 looks like the low. No, I'm sorry, 0.71%. So under 1%, from a high of 10% in 1998 to a current high of 5%. Sounds to me a lot like a fib level. Yep, again, we're right at that same fib level, right? So what I'm saying is that it's likely that we're going to get something. If it's going to happen, it's going to happen around this level. And it seems that Bitcoin is going to be it's going to be involved this time. All of crypto, at least. But as it always is, right? Bitcoin gets exciting. They roll into alts and all that sort of stuff. But this one, I believe, is right. I don't know, like today or next week or something like that. But where bonds are, where we are in this area, it could spend 6 months or a year or 3 years here and never do anything. But it's positioned in a place that chaos can happen. And I think I think everybody's in a different position with their finances in 2023 here, towards the end of 2023, than they were in 2020 about risk. I think everything was all risk. Everybody was in everything, top of the bull market. There had never been much of a, well, there had been a few pullbacks, but the last year or two has really cleaned up the markets. We've gotten rid of a lot of easy money folks. A lot of companies gone bankrupt. A lot of things have happened. So we're in a much cleaner spot for a Bitcoin run to take off. Of course, if it doesn't, it doesn't. And we use position sizing, and we use stop losses, and we use systems, the swing beast system to get us through that. Okay, so that's really what I'm thinking about here. I wanted to share that. I wanted to give the 50% discount to get the crypto season kicked off for traders who are, it's lovely to get a system at the end of the bull run, which is about the time that I released the system. After I had built it and tested it for, as long as I did, I wanted to have it some experience before I released it. And unfortunately, as you would expect, right when the market tops, but it works great on stocks, I use it on stocks, on futures, on currencies, and especially on cryptos. It's like my thing for crypto. And so since we're heading into this crypto bull market, I believe, or if we don't, we have tools. The system itself is built to not be affected in that environment. And so you would just not trade it. But what I'm saying is you're going to learn the swing beast system at the beginning of the crypto bull run, not at the end, which means if we have a crypto bull market that lasts from, so this was October to who knows, so a year, 2 years, let's call it about a year. And if we're looking left and seeing how to compare, it looks like we're nowhere near comparing ourselves to a breakout of that bull market. Even if we just moved up to that bull market, my guess is it's going to take months before that really starts happening. So that means you've got a number of weeks and months to catch the move, the pullback and rotation from Bitcoin, Ethereum, and Litecoin, and whatever coin, and just keep catching the rotations, taking yourself out of the crappy systems, putting yourself into the good systems, or the good assets that are set up, and just that rotation, bam, bam, bam. So that's what's going on. I'll put it up here. And then that's a 50% discount crypto. And again, you're not just getting a crypto system, you are getting a system to trade all assets. So if you find yourself in a bear market in crypto and you're like, I want to trade Apple, I want to trade the euro, it's built for that stuff. So, all right, everybody, thank you for spending the last far too long on this. And I love everybody. I'll see you guys. Peace. Later.